All right, folks, welcome to the review. To begin with, before starting, you have to understand that the price moves on these charts in two formations only: a range and a trend, and a range and a trend, and a range and a trend, and so on, right? What I'm going to introduce to you right now is a concept I've kept quiet for a while, but due to seeing the entire trading community lost, both ICT and otherwise, I'll give a snippet to the public, and I have discussed this privately. If the market moves in ranges and trends, right? You have to agree to that. If we both agree that the markets only move in ranges and trends, we have to then understand what is a trend and what is a range. And as you can see, you have range, trend, range, trend, range, trend, and so on, right? But first, we have to understand what is a range. A range in the charts, in price action, is generation of interest on both the buy side and the sell side. Right? So price moves in a consolidating range. You ever traded and you bought, and then it keeps going back to break even, and then you sell, then it keeps going back to break even. You can't catch a trend. Why? Because it's ranging, right? So market profiles, crucial basics. So a range is the generation of interest on both the buy side and the sell side, which means breakout traders are looking to buy the breakout and catch a large move, and breakdown traders are looking to catch a breakdown, right? They're trying to sell the low or buy the high, right? That's dumb money, which is incorrect. What you should be doing, and what normally happens, is this range is going to be hit on one side, right? So there's price chops up in a range, and then what happens is it'll hit one side of the range, trip everyone's positions, and then rally to the opposing end of the range, right? That's range trading basics summarized. Now, one way to identify ranges is by knowing that candles are ranges, right? And this answers the question, why did I sell GU last week with conviction, and why did I give the draw on liquidity to be the monthly bullish FVG with strong conviction, right? When we were up here, then I called live on Twitter, by the way, that it's going to tank into this bullish monthly FVG, right? Why? The answer is as follows. Candles are ranges, right? Every single candle is a range. So, in this case, as we know, there's a generation of interest on the buy and sell side, right? Let's go back. So as soon as you have this inside candle, that indicates chop, right? Even in classical price action, if the current candle is trading inside the previous candle, then that's a contraction, and you expect volatility to come next, right? So inside, a double inside, right? Still range high, range low, right? So the rules of range trading says, buy the low, sell the high, right? And as we know, if we hit one part of the range, then we've upset all the buyers, the breakout buyers, and we target the opposing end of the range. All right, so this one specific candle, and this is how to determine bias with an extremely high level of accuracy. All right, this one specific candle, if you turtle soup the high, then you go to the low. All right, that's how you determine bias. Take a look at that one specific candle on a lower time frame. It's a range high and range low. And as expected, range high, the rules say sell the high, buy the low, or don't buy the high and don't sell the low. All right? So range, one part gets taken, turtle soup of the high, and then of course, as soon as you see this rejection, so it goes smacks into the range high and smacks back down, then with a high probability, you can say that it's going to target the range low, right? Which is why I called live the monthly FVG as the target. And that's exactly what happened, right? It's gorgeous. Range high, range low. That one specific candle is the range. And that's it. That's the summary. Pretty simple. There are some more intricacies, such as knowing which candles to pick. What are the details of the turtle soup at the top, in the middle, at the bottom, right? There's more, but for now, that's all you should take away. Candles are ranges. This one specific candle is getting turtle souped, and then you target the opposing end. It's a new concept. Nobody has spoken about it before. And if you see anyone trying to copy it or steal it or sell it in their mentorships, because that's what happens sometimes with my information, it ends up in these goofballs' private mentorships. So if you see them using this, then call them out. The first mention was publicly last year, but now it's for everyone. Candles are ranges. If you hit one part of the range, it's likely going to hit the opposing end of the range. Right? So if that was too much, which it shouldn't be, here's a summary. Range. Identify the market profile. We're ranging. Right? So we're just chopping around. You wait for one end of the range to be hit and take it to the other end. It's that simple. And use the higher time frame candles as guides, right? Turtle soup. Or it breaks out and continues of the range, right? So the range can either be turtle souped or it can be broken out of and retested and used as a support or resistance level. Watch it once, watch it twice, watch it as many times as you need to watch. This is the peak of chart analysis. And the details will come later. A lot in UTS, but also for the public, in the public YouTube series of Turtle Soup. I wish you good luck, good trading, and I hope you found that insightful.